breaking news on Martyn Lucas Investor. We are looking at a take profit strategy, my personal take profit strategy on XRP, how to navigate the markets effectively and how to make sure you win. So we're going to look at all of that in today's video. Now on with the video. This was taken from a live video where we were exploring this, but if you missed that live video, you can watch it in this video. So today's deep dive, crypto profit takings, a strategic guide for retail investors. While with XRP surging to new all-time highs after a remarkable 32% weekly rally, now is a critical time to revisit crypto profit-taking strategies. As retail investors navigate volatile markets, understanding where and how to take profits becomes the difference between realized gains and painful reversals. This is not financial advice. We are exploring different theories and strategy frameworks used by market participants. The emotional battlefield. Crypto markets are psychological warfare. Fear, greed, FOMO consistently drive trading decisions. All the fake news as well. Oh my God, X. Just follow me on X. Here's my X. I don't give you the fake news. If I get something wrong, I'll say I got something wrong. The other day we were reporting on Jerome Powell possibly getting fired. I was reporting from Wall Street Journal. I said, wow, is this actually going to happen? Hours later, it was confirmed it wasn't. So then I came back and said it wasn't. But I'm not there chasing fake news saying XRP's got a certain number baked in, or XRP's going to $1,000 this cycle, or the Fed is using it. I mean, so many fake news stories. We don't do that. There's my X link in the chat. Just go and follow me on X. We're nearly at 1,500 followers. Let me refresh. Maybe we are already there. 1,482 followers. Maybe we can get to 1,500. So that's going to play with you, and there's going to be even more fake news. There's going to be even more scammers out there when XRP potentially goes parabolic towards $10. So there's the emotional battlefield with 84% of crypto holders making investment choices based on fear of missing out and 81% acting on fear, uncertainty, and doubt. So that is numbers, and that's something I found while researching, and that's most of us. I've been subject to FUD, and I've been, oh no, that's going to happen, I'm going to sell now, or FOMO, XRP is going up. But even today, I was like, I don't have enough XRP, shall I buy? But obviously I didn't, because it's just FOMO and it's bad. So we all experience it, but if you have a plan in place, then you're less likely to experience it. The most common, and if you make sure you subscribe to our channel, we will be covering it along the way as well, through the ups and the downs. We were here when XRP was at 33 cents, and I was just kept saying, I can't believe we're at these prices. I'm going to keep buying and buying and buying. So the most common emotional traps, including panic selling during corrections and revenge trading after losses, and destructive belief that this time is different. So one lesson, and I'm sure there'll be at least one or two of you that I'm speaking to right now. If you're leverage trading and you've lost, just walk away. Walk away, take a deep breath. Do not revenge trade. It's like going to gamble and you've lost, and then you go in again and you try and win it back. Don't do that strategy. Leverage trading, firstly, 95% of you will lose, because 95% of day traders lose. So take that into account. But even if you're doing it, go ahead, do it. Don't put more than you can afford to lose. But don't revenge trade. Don't long something and go, I just got liquidated, I need to make the money back. Let me go in, higher leverage, more money. Just, you will lose. Revenge trading, 90% of the time, 95%, 99% of the time, you're going to lose. So please, if you've got a leverage trading account and you do it, don't revenge trade. Don't buy. Be careful of FUD and FOMO as well. So managing trading psychology requires systematic approaches. Successful traders develop rules-based framework that overrides emotional impulses. This means setting predetermined exit points before entering trades, using automation tools to execute strategies consistently, and maintaining detailed trading journals to identify emotional patterns. The goal isn't to eliminate emotions, but to create a process that functions despite them. So if you are a trader, or even if you're a crypto buyer and seller, swing trader, it could be worth creating a journal. Realize what your emotions were the day you made a decision, so that you can go back and look into it and understand it. But the most important point is have a exit strategy. What is your exit strategy? It's time to think about your exit strategy. When are you going to sell? Are you going to sell now that you're at all-time highs? Congratulations, you're probably in profit right now. Do you have predetermined points? Because when you try and make the decision on the day that the price is moving, the emotions are going to take control, and your head isn't. My strategy is the laddering out strategy, scaling for success. That's my strategy. That's what works for me. I'm not saying this works for you. Laddering out involves gradually selling portions of holdings at different price levels, whether these levels are based on desired returns, Fibonacci targets, or historical resistance, reducing risk while maintaining exposure to potential upside. This systematic approach addresses the impossible task of timing perfect market tops while ensuring profit realization. No one can time the top. No one can. No one, you can't. We normally try and look at markets and go, this was the bottom, this was the top, look at these gains. But it's unrealistic, in all honesty, because no one can time the bottom, no one can time the top. That's why my strategy includes laddering out. I look at potential areas that could be a top using technical analysis, using Fibonacci's, using my knowledge, but also understanding I'm not a future, what's the word? I'm not someone from the future. I can't tell. I'm not a time traveler. I don't know exactly where it's going to top. So I've got all these levels because they could all be potential reversal points, but I don't know. So what I do at these levels, which are resistance levels, is I ladder out. And these are my own resistance points. Everyone will look at a chart differently and use different methods. So this whole strategy that I've just presented to you is because these could be resistance points. These could be the areas where they reverse, or higher chance they reverse, but I don't know which one. So what I do is not just pick one and go, that's where I'm going to sell. Although, good luck to you if you have a strategy, that's fine. If you have one level, $5, I'll sell all my XRP. You might do better than me. Or if you say, I'm just going to wait for $10 I sell, at least that's a plan of some sort. My plan is to ladder out because I don't know when it's going to top, and I want to take some profits this cycle. I've been holding it way too long. Obviously, I want to hold some for the long term, and I'll buy back in the bear market, but I want to realize some profits now. So I'll be laddering out. So this gives me more of a guarantee that I'm going to take some profits because I'll be starting low at $4.50 and I'll be ending quite high at $33. Most of my profits will be taken before $8.50. So I've got all my levels already set out on my laddering out strategy. A typical laddering strategy, you can do it in different ways. You don't have to look at the Fibonacci's. You can involve selling 20% of your holdings at a 2x return, another 25% at a 3x return, another 30% at a 5x return, keeping a moon bag for extraordinary gains. Each rung of the ladder represents a predetermined profit target with specific percentages allocated. The approach transforms abstract profit taking into concrete executable plans. During XRP's rally near $3.15, traders using this strategy would have already secured profits at lower levels while maintaining exposure to potential breakouts above psychological all-time high of $3.50. Professional traders also use Fibonacci retracement levels as a natural ladder rungs, providing mathematical derived exit points that align with market psychology. So there you go, my thoughts. Letting your winners ride. This is another one that's not really a strategy, but just more of an idea. Too often we don't let our winners ride. So if you haven't left your winners, leaving them to ride, think about it. If you bought XRP at $1 and it doubled, let's say you've got $1,000 in XRP at $1. At $2 you'll have $2,000. At $4 you will have $4,000. At $8 you'll have $8,000. So it doubles every time. But if you take your profits too early, you won't benefit from that compounding. So if you sold half your investment when XRP went from $1 to $2, you would only have, I don't know, $1,000 left. And then you have to start the doubling effect. And the doubling effect, the compounding effect is massive. So if you take your profits too early, and again, I'm not saying don't take profits, everyone's situation is different, but if you take your profits too early, you're not going to benefit from the compounding effect. And then those ones that you sold very early on would be worth so much more in the future, not just by the amount of 500 XRP you sold or the $500 you sold, but by the amount that would have compounded by. So there's nothing wrong with letting your winners ride because it compounds pretty fast. And if you never let your winners ride, then you won't get that much profit, and then the other ones, your other tokens will lose, and then you will just either be down or break even. So we've all had it when we sold too early and something went on 20x further. So if you just believed in ourselves a bit more and we let our winners ride, then we'll be in a better situation. And that's why with my XRP, I bought it at 50 cents, 40 cents. Maybe I added more at $1. But even though I had a 3x return, I didn't sell. Why? Because the doubling effect really starts coming into effect now. $3 to $6 and then $6 to $12. That doubling effect is really going to pick up. So letting your winners ride, the art of is all about that as well. Technical analysis, chart-based exits. So of course, I love technical analysis. I do the charts. I like looking at support, resistance. I'm teaching you all about that in the Discord right now. Everything I've learned about chart analysis, I'll put the link to Discord in the chat right now. It's in the comment section as well. So all about support and resistance, areas where I might buy, areas I might sell, represent either psychological barriers or technical barriers. The moving averages as well. I'm going to be keeping an eye on these moving averages. I've got the bull market support band here. If we start losing the moving averages, then we might be entering a bear market, and then I might have to sell lower than the levels we are at today, because I know we're going into bear market, or I have a higher conviction that we're going into bear market. So I use moving averages there as well to try to identify when we're in a bull market and when we're in a bear market. Charting patterns obviously also help, risk management, all that sort of stuff. I think I've covered the most important parts. Diversification across different cryptocurrencies and time frame reduces concentration risk. Rather than betting everything on a single asset, successful traders spread the risk by multiple positions, allowing individual winners to offset inevitable losers. But then again, are you over diversifying? Are you not letting your winners run? That's all stuff you need to take into consideration. Stop loss orders is always there to manage your risk. So successful crypto profit taking requires combining emotional discipline with systematic execution. Start by defining clear profit targets before entering trades. Use position sizing to manage risk, and implement laddering strategies to capture gains systematically. Technical analysis provides a framework for timing exits, while risk management ensures long-term sustainability. The crypto environment, amplified by XRP's rallies, presents both opportunity and risks. Traders who approach profit taking with discipline and systematic strategies are better positioned to navigate volatility and achieve consistent results. Remember, the goal isn't to capture every possible gain, but to build sustainable trading practices that compound over time. In volatile markets, profit taking becomes a skill that separates emotional traders from systematic professionals. By implementing these strategies, retail investors can better navigate psychological challenges of crypto trading while maximizing their chances of long-term success. And always remember, this is not financial advice, this is my thoughts and opinions. Crypto is very volatile. It's not for everyone. The emotional tail risk of it is quite high. If you're a very emotional person, or if you're putting in any more than you can afford to lose, please do not be investing in crypto, because at the heights of these markets, you make mistakes, you'll get emotional, and I don't want anyone making stupid decisions, because we've seen it too many times.
Cupid Books has become a member.
Thank you for becoming a member. So that was all in our newsletter. The link is the first in the description. It's also in the live chat. This video was made during a live show. So thank you very much for watching this video. There'll be 2 videos up above. But until next time, take care of yourselves and each other.